welcome to the Wealth Managers, and today I have with me someone who manages a rather large portfolio, refuses to divulge and disclose it, but I have with me Anupam Guha, who is the business head, Private Wealth Management at ICICI Securities. Anupam, pleasure having you. I believe that the amount of assets under management is so huge that you don't want to divulge it. Is it right?
The industry is growing, Ayesha. So obviously, as one of the leading players in the country, for us, what's more important is really the trust and the respect of our clients and the industry peer stakeholders.
I was just pulling your leg, but anyway. So tell me, this is an intriguing profession. When you say you're a wealth manager, what does it really entail? For someone who doesn't know what a wealth manager does and who's just busy either day trading or looking at buy and sell calls, which some of us also instill, what exactly does your profession entail?
So Ayesha, we cater to the wealth of the HNIs, and HNI again is a quite used word, but really if you were to misunderstood word, but if you were to dive deep into it, there is a wide array of clients that we manage with different profile, different segment, different need, different aspiration. Their own source of wealth are all different. And what I mean by that, if I were to just kind of elaborate further, you have, say for example, 4 broad category of clients that typically an HNI consists of. You have an entrepreneur who's a businessman. You have an inheritor who's really maybe the second or the third generation who's inherited wealth from the previous generation,
ancestors,
from his ancestors. The third is the CXO variety, the large salaried class who've created a lot of wealth through ESOPs today. In the Indian industry today, and the fourth is the professional. So, say for example, Bollywood, we are in Bombay, the large community of Bollywood stars, or maybe a film star, or a cricketer, a lawyer, or a actor, doctor, and all of those, right? So clearly these are the 4 category of clients that we kind of manage, and if and what we were chatting up a while back as well. If you were to dive deeper into each one of them, their needs and aspirations are completely different. So, say for example, an entrepreneur, if you were to see how he's created his wealth, it is largely through the business in which he is, right? And that's his passion. And so, for a first generation entrepreneur who's a self-made man, his outlook to money is quite different than an inheritor. Right? His ability to take risk.
They value money. It's hard earned. It's their sweat and blood.
I think both of them value money,
absolutely,
but their penchant on risk are completely different.
Absolutely.
One is a risk taker, the other wants conservation and preservation as a key criteria. So, when we engage with, say, a first generation versus an inheritor, our outlook and engagement styles are different.
So, tell me how. So, if you have someone who's inherited wealth, then largely it would be, I'm assuming, in the form of lots of real estate, lots of gold, and some old paper stocks, right? So, how would an advice to an inheritor be different than a first generation entrepreneur?
Sure. So, when we go and engage, say for example, with the first generation entrepreneur, because he's a self-made man, what he's interested is essentially if we can give him ideas how he can grow his business.
Absolutely.
So, investment banking as an engagement tool is extremely important. So, as private wealth management, it's just not about investments in stocks and asset class. It is also about financial, business needs and non-financial needs, if you were to categorize. And it's the business need that really is, so can I really help him do funding? Can I really raise private equity for him? Or in case if he's wanting to expand, can I create M&A opportunities for him? So, clearly our inroads into wealth management from a first generation are in that direction, and obviously as the relationship builds on, you essentially engage on all the other asset classes as well. But clearly there are people who are wanting to take risk, and hence equity or alternates is a favored asset class for clients like these. While for inheritors. Say for example an inheritor, because you would want wealth preservation, so clearly the engagement is that how do we systematically create a financial plan which is largely asset allocation based, because you would also realize that no single asset class in the long run would always outperform. right? And which is why you need to have all the
diversification.
Absolutely, diversification. So right from equity, alternate, fixed income, which is a large part here, to real estate, all of them combined really is the bouquet that you have to engage with, and it has to also take care of cash flows.
Since this has intrigued me, but how do you create a plan for a cricketer who knows he's going to retire at 35? Not everyone is a Sachin or a Virat Kohli. What do you do with their wealth?
So clearly, again, it is very similar to an inheritor, where you create a plan and you have a return in your mind, which is higher than an inflation, because it's not a savings portfolio, it's an investments portfolio. But you also have to have an eye on risk. How do you create the 12% risk adjusted portfolio? And which is why then you create a combination of equity debt, and then you do back testing to arrive at what should be the right asset allocation. So clearly, while what we started with an HNI, but if you dive deep into it, these are 4 different segments which are completely different. And hence, as a wealth manager, when I wear and go and meet a different kind of client amongst the 4 that I described,
it's a different hat that
it's a different hat that I really don.
Yeah, but typically, every wealth manager and every institution has their own style. Where do you think could the best returns be made? Because start of the year, if you were chatting with someone, it was a blind bet that move large part of your portfolio into equity because that's where money can be made. I can't say the same thing about equities right now, or maybe you can, at least not on a not on a shorter term basis. Is it time now to diversify, or is diversification as it is the key? Don't put your eggs in one basket, have a fair share of equity, debt, fixed income, what have you, even real estate and gold.
So if you were to look at an entrepreneur, how he's created wealth is by concentration of risk, right? If you were to think deep into it, what he's really done is essentially
bet on one thing, bet big.
Bet big, and that's how he's created his business. Once he's created that wealth, for him, preservation is important, and hence diversification is where people like us come in. It's very easy to get swayed by return, right? But it's all about greed and fear, and which is where people, professionals like us, come in, because we bring in the discipline that's needed for long-term sustenance of wealth. If we again go back on history, there is no one single asset class that you can say has always been in favor, right? So
but let's talk about the current market environment, for instance.
Okay, so on the current,
so how is it that you would portfolio advise to these 4 categories of HNIs?
Sure. So equity is in favor, right? There is clearly a trend of money moving in from physical to financial. Within that, equity per se, and you spoke about short term, it's a bipolar market, right? So if you were to pick up the ET today and look at the headline numbers, Sensex and Nifty are at an all-time high, but there is a large portion of our clients' portfolios in mid-cap,
which is massively
underperforming, and it's a bipolar really way of market that one is looking at. But clearly, I think what one will have to look at it is essentially, finally you have to go back to basics, right? Because markets will have their own yo-yo, but long-term money always happen if there is a disciplined approach, and which is where again people like us come in, because clients are always chasing return. And they will not understand the risk, and which is where one will have to educate them, if I can use the word, and handhold them during difficult times. So what is it that one needs to look at, right? One needs to look at earnings. So one needs to look at quality. One needs to look at management, and the sector in which, and whether there is a secular, growth story there or not. If all of these are by and large in order, and if the financial parameters are in order, then clearly I am saying one really need not worry too much on, whether the FI is pulling away money and hence the markets look down, or whether there is global crisis, trade war. It's not in your control. So what's in your control is what you really need to look at and stick to it and believe in it.
What about the salaried class?
So for salaried, and so SIP, is a big buzzword, and something that's been promoted by your channel as well.
Yes.
We feel that if you look at the markets today, it's the SIPs that have been the cornerstone, which is really,
they are the DIIs. Those are the inflows.
Absolutely.
Yeah.
So, for somebody who's getting money systematically and has an allocation, so here what are we looking at? You're getting your salary, you have your ESOPs, but of the money that is your surplus,
left spare, yeah.
you're really creating long-term wealth creation. And then you have milestones. So maybe your son wants to go to Harvard, or maybe your son's marriage at some point of time, etc., or maybe a retirement plan. You really have to create long-term milestone-based goal, and within that, clearly equity is finding a favor. And SIPs have traditionally been, what you're essentially doing is really removing the volatility from the market, investing, and investing at different points of time, and hence your overall experience is good. So I think SIPs really for people like them have this thing. You also have tax free, which is something that fits into their overall scheme, because you're again putting in money
and need to save the taxes, for them,
and long term investing. And then many of them also would want to look at newer vehicles of investment like an AIF, which are alternate investment funds, or say through a manager selection within the equity market through products like PMS. So it's a combination of direct stocks, mutual funds, PMS, AIF, some bit of debt, some bit of FMP, and a combination thereof.
So largely I find that it's only the financial instruments that you're recommending. I don't find any mention of real estate. I don't find mention of gold. Those are the asset classes that you don't believe are going to give you returns in the longer term.
So it's
You've only spoken financial instruments.
That's right. So it's not about our belief. I think the investor today is over allocated to both these asset classes today.
Perhaps, yeah.
So when we look into their overall allocation, there is clearly a need of money needing to move away from real estate into financial assets, which is point number one. Point number two, for the entrepreneur or for the inheritor, where we are talking about net worths slightly higher, clearly there are other avenues of investments as well. So say for example, unlisted as a space, as I spoke about, is something that a whole lot of our clients believe in, right? So they want to invest into and make gains of the equity market, or say a pre-IPO fund, something that they think that they will be able to take opportunity. Now products like these have inherent risk because of liquidity, because they are not liquid like equity. In equity, whether market goes up and down, you have the option to exit out at any point of time. In these, you do not have the option of exiting, because these typically are not listed. But is there an need of investors to invest into, or is there a favor?
Benefit, yeah.
Clearly there is. Also for some large entrepreneurs, they are also seeing all the distressed assets today available in the market as an opportunity of buying.
So what are some of the interesting unlisted themes? I know you're not going to talk about individual cases, but what are the themes in the market which are looking attractive?
So say for example, general insurance, say for example, or insurance per se, is a big theme, right? We are.
It's the fad,
It's not only the fad; it is also the fact that India is an underinsured country, right?
So I mean, there's reason why it's a fad.
That's right. Yeah. So will it do well as an industry? Clearly, I think as an industry, it will do well. Are there companies that have got IPO'd or are in the process of getting listed? So clearly there are opportunities in spaces like those. There are tech companies which are new age that are coming in, who are disrupting. Digital is a big theme in India today, both from banking, financial, all investments, all of it. Are there opportunities of playing the unlisted? Clearly there are. There are large institutions who are now wanting to invest, and the HNI category has emerged as one large piece all put together, which suddenly becomes chunky enough for the interest to be alive in a sector like that.
Anupam, you know what, hold on to the thought. We're going to take a very quick break. We've talked about the industry dynamics, the various kind of HNIs, the perfect asset allocator in the current market environments. But when we come back after the break, we'll try and talk about the trends that are currently prevalent in the wealth management industry, and what are the challenges that wealth managers actually face. That after the break. Back with the Wealth Manager, still in conversation with Anupam Guha from ICICI Securities, Pvt Wealth Management. Before the break, we were getting interesting anecdotes on the kind of HNIs, how misunderstood this category is, and what is really the best portfolio allocation. But let's try and understand really what are the trends emerging in the industry and what are the challenges that wealth managers today face. Anupam, the big trends and themes, I know you've talked about financialization, thanks to demonetization, GST, what have you. We are also somewhere forcefully driven into that direction, and that's the only asset class which is making you money. But besides that, what are the big ticket trends and themes that you see for the industry, which I would at least say is just at the cusp of a revival? You know, this is just the nascent stage at which wealth management is, because there's miles to go from here.
Sure, yeah. I mean, Ayesha, at one point of time, if you were to see the industry, you had the foreign players who were dominant, right? And today, the trends have reversed, where the Indian players have really done very well. And it is largely because of the fact that wealth management is no more a very small, industry or count of HNIs. But if you were to look at it today, wealth is scattered across the country, right? There are some statistics interesting of them, maybe 50% of it is largely in metros, which means that there is a large population of HNI clients who are in tier 2, 3 cities. So that is a big trend, that how do you really serve those customers, right?
Are they still untapped, or are tier 2 and tier 3 cities, because they also have a lot of large amount of wealth, it may be concentrated, but enormous wealth in those cities as well, are they also wanting to get into this very formalized approach of wealth management?
Absolutely. So, earlier it was largely the chartered accountants, the CAs who would really doing the job. But today, with the advent of digital, and I think digital is going to play a big role here, that how do you really reach out to them? So what is it that the customer is really looking at, right? So he also wants to invest into equity. He also wants the best advice available in the market. He also wants different vehicles of investment. So say an AIF, PMS, some structures that we kind of spoke about. He also wants an asset allocation to be done for him, which typically, was quite informal earlier. And he wants to really get into a far more formal engagement with a wealth manager. Now, in some places, it's a hub and spoke model. So players like us, as ICICI, we are fairly widespread in the country, and we have the network to really come and serve them. There also, it's a hub and spoke model, because you cannot reach out. So say as ISEC Private Wealth, we are present in 25 large cities doing private wealth business, while our overall distribution business is far more widespread.
But where is the concentration of wealth? Is it still the Mumbai and Delhis and Chennais of the world?
So the 50% that I spoke about are those 4 or 5 metros, but there is
largest amongst them. I mean, this is just for personal curiosity.
So Mumbai clearly, So it is Mumbai, Delhi. Now Bangalore is emerging as a big hub, given the entire startup culture there. So a whole lot of first generation entrepreneurs who've come in. You have CXOs who've really created a lot of wealth through IT, ESOPs. So that's a large piece. So Chennai, Calcutta are the old hubs of wealth, and then you have the traditional, auto ancillary. So your Pune, Ludhiana, those kind of Tirupur, where you have old wealth there. Calcutta clearly, but what we are seeing is that it is no more in those 8-10 cities. It is far more. It is maybe the top 25 cities that one needs to really cater to. And so the big trend that we are seeing is that how can digital play a big role in engaging with clients. And the trend that we see is that it's going to be an era of brand-led business, because when you do digital, you need to trust the digital platform.
Absolutely.
And hence build that trust. And within that, while you want execution to happen digital and you want your entire portfolio and control to be with you, you also want bespoke, customized solution through the relationship team. So people who are able to have a mix of or blend of digital, strong digital platform, and the relationship team with bespoke solutioning, a proposition and a platform, are clearly going to be the winners of tomorrow. And which is what ICICI Securities Private Wealth, the entire endeavor and journey has been towards that. So that's one big trend. The second big trend is that while I spoke about it, is control on investments. So, there is this new breed of investors who are coming in, who are saying, who are the do it yourself kind, right, and they are the ones who do not want any advice, who do not want wealth managers calling them. They are saying, give us a platform, give us all the research, make it simple for us,
we'll do it ourselves.
We'll do it ourselves, right, and there is enough and more information. If we need information, we'll reach out to you, but otherwise we want to do it ourselves, and that is a large trend of investors. I mean, they are the ones who are doing digital shopping, who are doing digital banking, the new generation, the CXO, the educated lot, which is a large portion on the HNI category that's really emerging.
Okay, so those are the trends, Anupam. But what about the challenges that a wealth manager faces? Where do you think that the biggest roadblock is in your industry?
So, from an industry perspective, if you were to ask any of us, I think talent is the single biggest challenge, right?
That's across every industry, isn't it?
Absolutely. Yeah. And the way the industry is growing by leaps and bounds, clearly we are seeing shortage of talent. And I think training will play a key role in terms of how this industry moves forward. So, I think from a solutioning perspective, there are 3-4 things that I think as an industry body we need to do. One is focus on digital and tech, because that is the way one can standardize service and reach out to a whole lot of larger population that is emerging, the new emerging wealth that is there. And because they are the new generation, I think they will embrace the new format of wealth management in a far more receptive manner versus a 65-year-old typical HNI, that you engage here today in Mumbai. The other thing I think what as a wealth management outfit we need to focus on is clearly on the proposition, because if digital becomes the means of engagement, then clearly proposition and the platform has to be very robust. And when I mean by proposition, it has to be an open architecture model, right? So, on the platform, do I have almost everything that an investor wants to, and some of the asset classes that we spoke about. So, I want to do a fixed deposit, can I do that online? In the same online platform, can I go and invest and buy direct stocks, do FNO, buy into futures, right, do commodity, do currency, can I invest into mutual funds, can I invest into a PMS or an AIF, can I do structured products, and at the other end of it, say for example, at the end of all of this, it becomes a large portfolio, can I have a one view of my overall portfolio, and can I do my tax planning and tax filing in by a click of a button, so that everything is there digital, and I really don't have to call up my chartered accountant or speak to 4 other wealth managers, but the tech platform is able to do it for me, right? So that is really what the future of wealth management is going to be. And on top of it, you have to have the relationship, because it's a business of trust and relationship.
Absolutely.
So you would need qualified, trained relationship managers. How do we really focus and work to build them and mentor them? This business is all about, it's an apprenticeship model, right? So the new breed of wealth managers who come in, is the older lot able to handhold them? As a firm, do we give them enough space and training
to grow,
to really grow? So say for example, at ICICI Private Wealth, we have a 1 full year program where a management trainee goes through multiple divisions, right? So he goes to research, he goes to family office team, he goes to product, he does sales, he does investment banking, and a combination thereof. And then he is attached to a senior wealth manager, wherein he is a buddy RM, a shadow RM, and learns the trick just by by just learning and assimilating. So that really I think is the challenge, and if as an industry we are able to invest into it, I think we all are going to get the fruits of it.
Okay, Anupam, pleasure speaking with you. I'm so glad that you could take time out and speak with us today. Thanks so much.
Pleasure is all mine.